In a significant shift within the political landscape, the Democratic Party is increasingly aligning itself with the cryptocurrency industry even as it grapples with the implications of former President Donald Trump's controversial foray into the digital currency realm. As Trump cultivates a crypto empire complete with private dinners for top investors at his golf club, Democrats are condemning what they perceive as corruption emanating from the White House. Yet many in the party are recognizing the potential benefits of engaging with the burgeoning crypto sector. The recent legislative efforts to establish a regulatory framework for cryptocurrency, particularly through the Genius Act, have garnered support from an unexpected coalition of Democrats and Republicans. This bipartisan initiative aims to create a new regulatory structure for stablecoins, cryptocurrencies typically pegged to the US dollar, while also addressing consumer protections. Notably, 16 Democrats voted to advance the legislation, which underscores a growing acceptance of cryptocurrency among party members despite internal divisions regarding Trump's involvement. "I'm all on board with the idea of regulating crypto," stated Senator Chris Murphy, Democrat, Connecticut, highlighting the delicate balance Democrats must strike between regulating an emerging industry and addressing ethical concerns linked to Trump's financial interests. The legislation is moving forward more swiftly than Congress typically acts on new industries, reflecting the crypto sector's increasing political clout fueled by significant financial contributions to campaigns. The organization Fairshake, a crypto-focused super political action committee, has made waves in the political arena, spending over $130 million in congressional races during the 2024 elections. Its efforts included supporting Democratic candidates who voiced pro-crypto sentiments, further underscoring the industry's rising influence. Brian Armstrong, CEO of Coinbase, remarked, "DC received a clear message that being anti-crypto is a good way to end your career, as it doesn't represent the will of the voters." As the Senate moves closer to passing the Genius Act, a critical point of contention remains. The bill's current exclusions allow the president and his family to profit from stablecoins, a fact that has caused unease among some lawmakers. Following public revelations of Trump's extensive investments in the crypto industry, Senate Minority Leader Chuck Schumer urged Democrats to unify against the bill to strengthen their negotiating position. As a result, a bloc of Democrats initially supportive of the Genius Act reversed course, ultimately leading to a temporary setback in the legislative process, with the legislation now on track for Senate approval. The subsequent steps involve a review by the House before it can reach the president's desk. Should the bill pass, it could pave the way for further regulatory measures that extend beyond stablecoins, addressing the broader complexities of cryptocurrency market structure. Advocates for the industry are keen to push for more comprehensive legislation that not only regulates stablecoins but also addresses market structure, which they believe is critical for the industry's long-term viability. Meanwhile, the crypto landscape is facing scrutiny from law enforcement, as evidenced by significant legal actions against individuals involved in illicit activities. Recent developments include the indictment of Vri Gugnan, a cryptocurrency payments firm founder, accused of laundering over $500 million linked to sanctioned Russian banks. This case exemplifies the ongoing challenges authorities face in regulating a rapidly evolving industry that often intersects with global financial crime. As Democrats navigate their relationship with the crypto industry, they are also contending with the implications of Trump's ventures, which blurred the lines between personal business interests and presidential responsibilities. The administration's mixed messages regarding foreign ties, particularly concerning individuals with connections to China's Communist Party, further complicate the political narrative surrounding cryptocurrency. Looking ahead, the outcome of the Genius Act and the anticipated Clarity Act, aimed at establishing a clearer regulatory framework for crypto, will significantly shape the future of cryptocurrency in the United States. As lawmakers strive to create a balanced approach that fosters innovation while ensuring accountability, the evolving dynamics of the political landscape will undoubtedly influence how the crypto industry develops in the coming years. The intersection of politics, technology, and ethics will continue to be a focal point as both parties grapple with the implications of this digital revolution. In a remarkable surge, Bitcoin has crossed the $110,000 mark, driven by renewed optimism surrounding global trade and increased interest from institutional investors. This latest ascent has not only invigorated Bitcoin but has also propelled crypto-related stocks in the United States, showcasing a growing trend of public firms accumulating cryptocurrency as part of their treasury strategies. On June 10, Bitcoin experienced a significant uptick, rising approximately 4% to settle at around $110,150. This rally comes on the heels of a broader market recovery largely fueled by easing geopolitical tensions between the US and China, which have rekindled investor confidence. As market jitters receded, Bitcoin's price approached its recent peak of $112,000 reached in May. The positive momentum was mirrored in the performance of US-listed crypto stocks. Major players in the sector, including Circle Internet Group, Core Scientific, CleanSpark, and Riot Platforms, all recorded gains, with Circle shares rising by 7% to $117.79. MicroStrategy, known for its substantial Bitcoin holdings, saw its stock climb 4.71% to $396.61, further emphasizing the trend of firms integrating Bitcoin into their financial strategies. Notably, the enthusiasm for Bitcoin has spurred a wave of corporate purchases. Bitmine Immersion Technologies announced its first acquisition of 100 BTC, while KULR Technology Group revealed it had invested an additional $13 million in Bitcoin, bringing its total holdings to 920 BTC. These strategic moves by public companies highlight a growing belief that Bitcoin can serve as a reliable asset in an increasingly volatile market. An analysis of the market dynamics reveals that Bitcoin's recent ascent is not merely driven by retail speculation. Institutional engagement has been pivotal, as evidenced by substantial leveraged bets from crypto whales. One significant player reportedly opened a leveraged long position worth $250 million, which, according to blockchain data, has already yielded considerable unrealized profits. This kind of activity underscores a prevailing sentiment among large investors that Bitcoin is poised for further gains. However, this bullish trend is not without its caveats. The crypto market remains susceptible to volatility, particularly in light of high leverage levels. Analysts caution that any adverse news, particularly regarding US-China relations, could trigger a swift pullback. Current market conditions suggest that Bitcoin is at a critical juncture, balancing between robust support and potential sell pressure from long-term holders. As the situation unfolds, all eyes will remain on upcoming macroeconomic indicators, particularly the Consumer Price Index (CPI) release, which is expected to provide fresh insights into U.S. inflation and may influence market sentiment significantly. The interplay between corporate strategies, institutional investments, and macroeconomic factors will be crucial in determining Bitcoin's trajectory in the short term. In conclusion, the recent surge in Bitcoin's price, alongside the growing interest from public companies, paints a promising picture for the cryptocurrency market. However, as it approaches historical highs, the importance of vigilance cannot be overstated. The next few weeks will likely reveal whether Bitcoin can sustain this momentum or if external pressures will lead to a recalibration of expectations. As the landscape evolves, market participants must remain agile and informed, navigating the complex interplay of factors that drive this dynamic sector. In a striking intersection of politics and cryptocurrency, a recent dinner hosted by former President Donald Trump for top investors in his $Trump memecoin has raised eyebrows, particularly in light of the presence of a notable guest with ties to the Chinese Communist Party. The event, held at Trump National Golf Club in Virginia, has ignited discussions about the implications of such affiliations and the broader inconsistencies in the Trump administration's approach to foreign nationals, especially those connected to China. The dinner, which took place on May 22, 2025, was open to the top purchasers of Trump's digital currency, with the highest bidders receiving exclusive access to the former president himself. Among these guests was He Tianying, a technology executive and member of the Chinese People's Political Consultative Conference CPPCC, a government advisory body that aims to extend the Communist Party's influence within various sectors of Chinese society. He registered at the event as a resident of Hong Kong, reportedly spent $3.7 million on the memecoin, making him the seventh largest buyer. This participation starkly contrasts with the Trump administration's previous rhetoric, which has often characterized visitors from China as potential security risks. As highlighted by the New York Times, this incident underscores a dissonance in how the Trump administration scrutinizes foreign nationals. While the administration has pushed to revoke visas for Chinese students with ties to the Communist Party, it simultaneously welcomed He into a private dinner at the president's golf club. Caroline Leavitt, the White House press secretary, downplayed the significance of He's attendance, asserting that the event was a private affair and not officially sanctioned by the White House. However, her comments have done little to quell concerns regarding the administration's vetting processes and the ethical implications of Trump's cryptocurrency ventures. The event was initially marketed as an opportunity for the top buyers of the memecoin to engage with Trump, who has shifted from being a crypto skeptic to a vocal proponent of digital currency. Just days before his inauguration, he launched the Dollar Trump memecoin, which critics argue serves as a vehicle for personal enrichment. The dinner itself raised questions about the monetization of the presidency, especially as Trump spoke at an event adorned with the presidential seal, reinforcing the blurred line between his personal business interests and his role as the nation's leader. The memecoin, described by its creators as a collectible akin to trading cards, has reportedly generated substantial revenue, with estimates suggesting that it brought in upwards of $320 million in its early stages. The top 220 bidders who gained access to the dinner had collectively spent approximately $148 million on the memecoin, revealing a lucrative intersection of political influence and cryptocurrency investment. Critics, including political opponents and watchdog groups, have expressed alarm over the potential for corruption and self-dealing, arguing that the event exemplifies a troubling trend in the politicization of financial ventures. During the dinner, Trump addressed his guests, framing the Biden administration as hostile to cryptocurrency innovation and positioning his own presidency as a savior for the industry. His remarks were met with skepticism from some attendees and outside observers, particularly given the backdrop of protests against perceived crypto corruption occurring just outside the venue. In a broader context, the presence of individuals like He Tianying at such events raises significant national security questions and reflects the complexities of engaging with foreign investors in a politically charged environment. The CPPCC, of which he is a member, plays a crucial role in shaping policy recommendations within China, and his engagement with Trump may signal attempts to align business interests with political connections. As the cryptocurrency landscape continues to evolve and attract attention from both investors and regulators, the implications of such high-profile connections will likely remain a focal point of discussion. The potential for ethical dilemmas and conflicts of interest in political and financial spheres is becoming increasingly apparent, prompting calls for greater transparency and accountability in dealings that intertwine governance with private enterprise. As the situation unfolds, observers will be watching closely to see how these dynamics impact both the future of cryptocurrency regulation and the political landscape in the United States. In recent weeks, Ethereum has shown signs of renewed strength, fueled by a significant uptick in institutional interest, particularly from investment giant BlackRock. The digital asset, known for its smart contract functionality and decentralized applications, has been consolidating in the range of $2,300 to $2,800. However, several key indicators suggest that Ethereum's price could soon break out, potentially reaching as high as $3,000 or more. Ethereum's futures open interest, a measure of the total number of outstanding contracts, has surged by an impressive 40% over the past month, climbing from $26 billion to $36 billion. This surge indicates a growing confidence among traders as the market stabilizes. CoinGlass data highlights this trend, suggesting that such a consolidation phase often precedes significant price movements. Before our technical chart reveals a hidden bullish divergence where the price has formed higher lows while the relative strength index RSI has created lower lows, signaling a potential trend reversal. Adding to the bullish sentiment, spot Ethereum exchange-traded funds ETFs have experienced their fourth consecutive week of inflows with a total addition of 97,800 ETH, bringing total holdings to approximately 3.77 million ETH. This influx underscores the increasing institutional appetite for Ethereum, especially as BlackRock quietly accumulates Ether. The asset management firm currently holds about 1.5 million ETH, valued at approximately $2.71 billion, having invested an additional $500 million in the asset over just 10 days. Such moves reflect a strong institutional conviction in Ethereum's long-term potential, particularly as it remains 48% below its all-time high. In the context of these developments, Ethereum-based investment products have led inflows among cryptocurrency exchange-traded products ETPs, attracting $296 million last week despite a general market slowdown. This marks the best weekly performance in this segment since the 2024 election cycle, with Ether ETPs now constituting over 10.5% of total crypto ETP assets under management. CoinShares data indicates a notable recovery in investor sentiment, further bolstered by the broader market's positive trajectory. Technically, Ethereum is now positioned back above the midline of the Gaussian channel, a dynamic market trend indicator that adapts to volatility. Historical trends suggest that when Ethereum crosses this midline, significant price rallies often follow. For example, in 2023, Ethereum soared by 93% after surpassing this level. Analysts are predicting that if momentum holds above the Gaussian channel midline at $2,570, ETH could push towards a range of $3,100 to $3,600. As the cryptocurrency market continues to evolve, the interplay between institutional investments, market sentiment, and technical indicators will be crucial in determining Ethereum's trajectory in the near future. With BlackRock's ongoing accumulation and the positive technical signals, many are watching closely to see if Ethereum can reclaim its previous highs and establish a new trend in the months ahead. As always, potential investors should approach the market with caution, conducting thorough research to navigate the inherent risks associated with cryptocurrency investments. In recent weeks, Solana SOL has been navigating a turbulent market landscape, raising questions about its future trajectory. As of June 10, 2025, SOL has shown signs of recovery, but analysts remain cautious about the sustainability of this upward momentum. Currently trading below $170, the cryptocurrency has experienced a noteworthy decline of over 10% in the last month, despite a recent bounce in price. This fluctuation has left investors wondering if Solana is truly back on a bullish track or if further corrections are imminent. One key indicator of Solana's market health is its relative strength index RSI, which has climbed to 54.51 from a low of 39.26 just a few days prior. While this improvement suggests a resurgence of buyer interest, the RSI remains below 60, indicating a lack of strong bullish conviction. Historically, the 60 threshold is viewed as a critical level for confirming more robust upward momentum. As it stands, the market sentiment appears cautiously optimistic, with SOL's price needing to breach cloud resistance and the significant level of $163.76 to confirm a potential reversal. Compounding the uncertainty is the bearish alignment of the Ichimoku cloud, which remains thick in red, signaling strong resistance ahead. Although the Tenkan-sen has crossed above the Kijun-sen, a typical bullish sign, the price is still trapped within the cloud, with the overall EMA structure reflecting bearish conditions. For SOL to maintain its recovery, it must decisively break above this cloud and hold above key support levels, particularly $150.65. Failure to do so could lead to a retreat back toward the support level of $141.53. Recent market dynamics have also been affected by macroeconomic factors, including trade talks between the US and China, which have buoyed sentiment in the cryptocurrency market as a whole. Bitcoin and Solana both experienced price increases amid these discussions, highlighting the interconnectedness of traditional economic indicators and cryptocurrency performance. As of June 9, 2025, Bitcoin was trading at $109,520, reflecting a 3.71% increase, while Solana was valued at $159.12, up 5.2%. In addition to these market fluctuations, Solana has recently gained visibility through its proposed inclusion in the Nasdaq Crypto Index. On June 2, 2025, Nasdaq submitted a rule change proposal to the U.S. Securities and Exchange Commission (SEC) that would expand the index to include Solana alongside XRP, Cardano, and Stellar. This move is significant not only for enhancing the index's diversification but also for potentially increasing institutional investment in these cryptocurrencies. The SEC's decision on this proposal is anticipated by November 2025, and market participants are already reacting positively with early indications of increased interest in SOL. The potential inclusion of Solana in the Nasdaq index could provide a pathway for more institutional adoption of its technology, which is renowned for its scalability and smart contract capabilities. If approved, it would also allow existing ETFs tracking the Nasdaq Crypto Index to invest in a broader array of cryptocurrencies, thereby reducing tracking errors and providing investors with diversified exposure. In summary, while Solana has made strides in recovering from recent lows, significant challenges remain. The path to a sustained bullish trend will depend on its ability to overcome critical resistance levels and the broader market dynamics influenced by regulatory developments and macroeconomic factors. As the cryptocurrency landscape continues to evolve, all eyes will be on Solana and its competitors to see how they navigate these turbulent waters and position themselves for future growth.